So yes, daily market analysis again today. We had overnight, or early this morning, the US FOMC, US Fed Reserve with the interest rate decision. Didn't do too much, didn't change rates. As expected, they held it at 5.5%, but there were a few comments that we want to pay attention to. I'll go through that shortly. Today, later in 4 hours, I think. In 4 hours, we do have the Bank of England with the interest rate decision. The pound dollar is already front running, seems to be already front running that decision. So we've already had our trades, we already had our take profit on that. Linley was just talking about that as well. So that was during the live stream through the day. But we'll talk about that further. We'll see what's the next possible move with that news event. If you are new to the session, do drop a message and say hi. Let me know where you're joining us from. And for all the regulars, I see the names there. Big welcome back. Thank you again for joining me. If you have any questions at any point in time, please feel free to put it into the chat and let me know. And you can help me out massively by remembering to click on that like and subscribe button if you haven't already. All right, so daily market analysis, quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. The contents of this webinar are not intended to be a recommendation to trade a financial product. So please remember that your objectives, financial situation and needs has not been considered, and you should consider its appropriateness to your circumstances. Right, take that away. Now, a lot of things to go through, a lot of things to talk about, because yesterday, when it goes back, okay, yesterday we had a whole bunch. We spoke about the Aussie CPI, we had the Bank of Japan with the interest rate decision, we had the yen spiking down, spiking right back up, and then crashing all the way down through the afternoon and the evening. We had the CPI for the euro, which didn't do too much. We had the Canadian GDP, which was a little bit surprising, where it came. It was a 0.3, expected a 0.1, got released at a 0.2, and then all through that, well, we had firstly we had ADP non-farm as well. Came out a lot lower than expected. It was a 150k, revised slightly to upwards to 155. Expected 147, got released at 122k. Didn't do too much to the dollar index because, as we expected, everyone was just waiting for this event at 2 a.m. GMT plus 8, where we were looking at the Fed funds rate kept on hold at 5.5%. No big surprise there. We knew that was most likely going to happen. But during the press conference, as somewhat expected, Chair Powell highlighted a few things. I'm not going to go through, I mean, you can watch the whole thing, but I'm just going to look at the headliners, where overwhelming sense of meeting was not to cut this, well, overwhelming sense of meeting was not to cut this meeting, but possibly at the next meeting, September. Big hint to September rate cut decision. The main other thing is that you can see that ADP was slowing down. We haven't had much big numbers on the non-farms over the last couple of months as well. The downside risks to employment are real now, so they have to weigh the risk of waiting too late to cut rates. So they're looking to cut rates now to try and not let unemployment or not let the employment data suffer too much or continue suffering. So they have to cut rates. Again, another hint to a September rate cut decision. Second quarter inflation readings have added to our confidence, So again, another hint. Before this, it was always talk about confidence to decide on a rate, well, confidence in the path of inflation slowing down, leading to that decision to cut rates. So adding to their confidence, have added to their confidence. So a lot of that is no big news this time around, but if you look at the CME Fed Watch 2. September is now in the headlights. We're up to September 18. We're at 100% rate cut. That has been 100% even before this meeting yesterday. We're looking at 86.5% chance of a 25 basis point rate cut and a 13.5% chance of a greater than 25 basis point rate cut. So it seems like it's not about whether they're going to cut rates, but how much they're going to cut rates by, right? So because of this, what we did see on the dollar, it did drop early, right? It started pushing down early to the downside. By 8 o'clock GMT, well, 9 o'clock GMT plus 8, it was at that 104 level. It pushed up slightly, and then during the news at 2 a.m., we saw it spike up slightly before coming back down. During the press conference, came down to rest along this 104 support level, right? So unfortunately, it did not break strongly because he only hinted at a confidence, employment numbers suggesting that we downside risk. What was the other headliner? The other headliner was overwhelming sense not to cut at this meeting, but possibly at the next meeting. Suggestions are there, but no big concrete evidence or no big concrete decision. So it came down to this 104, failed to break 104 to get to that 103.65 level. So it came down, 104, tested, and now over the last couple of hours since this morning has found that support and is pushing back up slightly, right? Pushing back up slightly right now. So that's the dollar index. With that rate, well, that's the Fed Reserve decision with that dollar index. Through today, nothing much through today or through to 7 p.m. GMT plus 8, where we do have the Bank of England, the BOE, with the interest rate decision, 5.25 currently. Expected to cut by 25 basis point down to 5%. So a rate cut expected here with voting expected. Why is that not clicking? Okay, with voting, again, just a quick reminder is that it comes in it's currently at a 0 to 7. What it means by 0 to 7 is no members have voted to increase rates, naturally. 2 members have voted to decrease, while 7 members have voted to hold rates. That's 0 to 7. What we're likely to see is a 0.63, where we're looking at no members voting to hike rates, 6 members voting to cut rates, while 3 members are likely to vote to keep rates on hold. So if we go 6-3, more members voting to cut rates, more likely we're going to cut rates down from 5.25 to a 5%. Is this a definite rate cut decision to come? You can never say it's a definite. Someone might change their mind, a couple of people might change their mind and vote to keep rates on hold. But based on the data in the lead up to this decision, it does look like a rate cut should be the most suitable, the most appropriate decision. And what we have seen, right, this rate cut decision has been projected since a couple of days ago, even a week ago, I think. If I'm not wrong, even a week ago, but a couple of days ago, it's already been said, Bank of England going to cut rates by 25 basis points. And what we've had so far, this was a trade that we were talking about earlier today. I highlighted that it was failing to break above this resistance level. It was failing to break above this resistance level, testing several times since 2 a.m. this morning, tested, failed to break, highlighted that, and then as it was pushing down, I said, look, we could look to sell at 1.2845. I had my take profit down to this point there, right? But it came more, and then it happened a lot faster than I thought. I thought it was going to happen at about 6, 7 o'clock, about that point there, but it started pushing down as London was opening, as the UK markets was opening. I felt that it seems like it's a front running of that news decision, of that rate decision. So we saw the pound dollar did push down. Okay, we got in a little bit earlier than that, got in, pushed down from 1.2845 all the way down. It was outside of the Bollinger, and in the lead up to this live session, I got out of that trade there at about 35 pips, just about 35 pips. As it was outside of the Bollinger, and I said, let's see what happens here. Could still see further downside, but we're going to see a reaction because of the equal low there, right? So it has started to push down on this last 13 or 14 minutes now in the new hour. But one thing to really be very careful of is that it is very far outside of the Bollinger. It does look like it has that further downside potential, but you can't rule out the likelihood or the chance of it bouncing back or retracing back up again before continuing lower. Okay, so we are still looking at this 61.8 level, which is down to this dotted line here. I think it'll get there, and then what I think is that it could do is get down there, test, and bounce back up, and then maybe later that way. We'll talk about that more as we look into the charts more. Right, so that's the news decision at 7 p.m. And then through that, we have unemployment claims for the US, weekly number, not too concerned. And then manufacturing PMI for the US, 48.5, 48.8, not too concerned about that either. Then through to tomorrow, we have the Swiss CPI, and then ending the week with a non-farm employment change, 206, 176. Looks like it might be a weaker number, but we'll talk more about that tomorrow as when we come to that event, right? In the lead up to that event. Right, so now, a whole bunch of PMI numbers to be released. Okay. So now looking at the charts, and before that, good morning, Stefan. How are you doing? Hey, Nev, how are you doing? So now looking at the chart, we see the dollar index testing 104, bouncing back up. Okay, let me just check the level. It's broken 61, so it's just at a nice round number. I don't need this for now. I'll take that away and these away for now. I'll check. Hey, West Stone Music, good morning. How are you doing? Down to this point. All right, and then we have that. I think it's broken. So it's right up to this point here. Okay. Hey Jamil, doing very well. Okay, so now on the dollar index, what I'm looking, and it's the 1st of August. Happy 1st of August, everyone. Dollar index found support at 104, bouncing back up. What I'm looking at is that it needs to stay, or it should stay, below this 104.30. 33. Let me see. 104.45. It looks like it's going to come back within this range, right? But first it needs to break past 104.22, this 38.2 level, which I think I can take away for now. I'm anticipating that the dollar index, if it pushes up, no major news. Okay. looking at this, I would be anticipating that the dollar index, I'll put that back in again, right? Especially if it breaks above this 104.22 level, we are likely to see it test 104.40. It definitely needs to stay, I want it to stay below 104.45. Okay, so today being the 1st of August, dollar index found support at 104. Right, found support at 104. We see it retracing. Retracing could test that 50% level at about 104, between these points, right? Could test within this, hang on. Could test within this area here. So about that 104.40 level. Found support at 104. Okay. If it breaks 104.20. Okay, above 104.20, retracing, above 104.20 could test 104.40, right? So what I'm looking at here is for it to push up, test this level, and possibly turn back down again. That's what I'm looking for. So it's retracing above. My language is going off today. If above 104.20, could retrace. Okay, there we go. Before possibly pushing back down again. I don't see any big reason why it should push all the way back up unless the pound dollar has a massive big drop, dragging the euro down as well. You know, then big weakness on the euro and on the pound is going to give some strength, relative strength to the dollar to push it back up. But what I'm looking at is if it breaks above this point, it'll come up to here, test, and then possibly reject back down. If it doesn't break above this point, then it would sit there, and then we're still looking for it to come back down to that 104 round number level. Okay, so generally I'm just looking for it to retrace, test, and then after that look to continue with that downward push, because we should be thinking of the likelihood of a rate cut decision in September, going to add some pressure to the downside on the dollar. Don't need that. That makes sense. That's good. That's good. Yeah. Okay. And you know what I would actually do? I don't need such a big line there. Is that I would actually change this around, right? So I'll put this here. So that's my big support level, but 104 is a nice round number that it's respecting at the moment. So that's a big support because that was a swing low here that we saw on the 17th and 18th of July where it pushed up. So now we're looking at it coming back down, test, and then possibly turn back down. Haider with the question, political conflicts in the Middle East. It doesn't seem to have that big an impact on the dollar at the moment. Right? This move, breaking it down, this move on the dollar seems to be driven, this upward push seems to be driven by the pound dollar with that big drop, right? And this continuation seems to be pushing that up. So I feel like the weakness on the pound is giving some relative strength to the dollar That's why I'm looking for it to push up and then the dollar weakness to come back into play to push it back down. All right. So far, the headliners that we've seen from the conflict in the Middle East hasn't had that direct impact on the dollar yet. Hey Hubert, just talked about that on the pound dollar. Why did it go down? Seems like it's a front running of the BOE rate decision coming up. All right, so we're looking at that. Okay, so I'll put this in. Basically, we're looking to wait for retracement to complete before continuation lower. That's what I'm looking for. Okay. And then with that, pound dollar is still dropping. We're going to see it test that. But let's get to that later. The first off is the Kiwi dollar. Right? We had an inverted head and shoulder that I think was highlighted yesterday, if I'm not wrong, by Haider. After our session, he was saying inverted head and shoulder. It broke the neckline, had a big push to the upside. So if you got onto that trade, you would have been, looking at a 30-something pip move to the upside, or if you got in as it broke the neckline, that would have been a very good trade. And it did exactly as we expected, came down, test that resistance, turned now support before pushing back up. Now, with all that done, it's sitting right in the middle of this, well, not right in the middle, but in the middle of this support and resistance level. Okay, and what I'm pointing out here is also that you see this point where it's tested, and it's testing right now. So what I would be, resistance level is here. I feel that these lines are not very strong. I feel that these lines are not very strong. We do have that point there. It could be a little bit lower. It's not going to make much of a difference. Okay, so it's not going to make much of a difference. I wouldn't do anything on the Kiwi yet unless, it sits there in consolidation. Now, it pushes up, breaks above that resistance, dollar weakness scenario, then you look to get in. You'll be looking at 5990, stop loss about 20 pips, take profit, you could go up to 55 to the upside towards that swing level. Yep, that makes sense. So that's what I'll be looking for. On the Kiwi would be to buy at 0.5990, stop loss 20, take profit 55 to the upside. Right, dollar still pushing up. And you can see dollar pushing up. Dollar has been pushing up over the last 2 hours, but yet the Kiwi has just been sitting there. Right, so we're looking for it to sit there, push up slightly, break that resistance to the upside, then onto the Aussie. Aussie this morning, so that didn't trigger, we'll take that away. Right, this morning as it was sitting there, 9 a.m., as I was looking at it sitting there, I was very keen on doing that move down, on trading that down. Right, on trading that down, but it was not a very big trade and it was right in the middle of this range. So that's one reason why I thought could be a setup, but not a great setup, not worth taking that risk for, because it could very well just go at that point, test a little bit higher before coming back down. Right, because we had those swing levels and this level here that could just be tested before coming back down. So the stop loss wasn't very good. what I would be looking out for here on the Aussie. Now, looking at this, don't need that for now. Take that away. In fact, I don't even need that. I don't think we need that. I think what we need to see here on the Aussie is that we have 61 is respected 61. I like that. And we have this resistance. Sorry, I'm just scrolling around just to make sure I check all my levels. Okay, so we have that point, which makes sense. What I would like to see here is that that's my resistance area. It's right in the middle there. Aussie CAD looks good. We'll have a look at that shortly. Test in consolidation. I feel like it could push up before turning back down, or sit there before pushing back down. Remember, we had yesterday the Aussie CPI number, which wasn't very, which was 3.8, which supported the RBA's decision to, could support the RBA's decision not to hike rates further. I wouldn't actually do anything on the Aussie. I wouldn't do anything on the Aussie. I would actually just wait to see possibly a reaction up on the resistance or down here at 6.5. Right? And I'm looking at this. And that's what I'm thinking. Hang on. Nothing shouts out at me on the Aussie. I would say Aussie, it's possibly a do nothing. Look for reaction at 0.65. That means could be looking at it pushing down slightly down to this 0.65 level, and then maybe if we see that dollar weakness come back strongly into play, a double bottom could lead to this push back up. But we'll see what happens. It's right in the middle there. It's not worth trying to guess on either direction, right? So I'm looking for it to consolidate, maybe to push down slightly. Okay, then onto the US yen. Came right down. This was something that we looked at. This was during our session yesterday, right? As it was popping lower, I rushed off the session, was scalping it down to the downside through the evening, right after our session all the way down, and you can see that it was outside of the Bollinger, so scalped it slightly on the outside of the Bollinger as it came back in. Continued trading it lower, right? Continued trading it lower. Then it bounced back up. When you look at this, right? At that point, it came back up to that 23.6 level. This was on the FOMC news decision. After that, and I think if you look back, I was looking at it to come back up and turn back down. After that, it came down, tested 149. Give me a second. Tested 149. That's a nice round number. Formed a pin bar. And then push back up over 9 a.m., 10, and this morning. This morning to afternoon has pushed back up. Right now, on the US yen, it is holding 23.6, right? 23.6 is holding. I was thinking that we could see the US yen push up slightly further to this point, to that 151 level, before turning back down. But with the way it's holding now, right, it might hold there for a little bit and form a bit of a shoulder, head, and shoulder that way. before breaking to the upside. Okay, so I'm looking at that, maybe holding at this point to form the inverted head and shoulder to break up. So I want to see what happens firstly at 150.15, which is firstly at the 23.6 level, but I'm quite interested in it at this 151 level, which is also this point here. This point here, 151. Okay, so not ready, and we're definitely looking to sell down on the yen. We're definitely looking to sell down on the yen. So wait for it, look for a rejection either at this point or more likely at that 151. I would like to do this is 150.75. Stop loss would be about 45 pips. Take profit, you can look for that good 100 and just down to 149, 170 to the downside. That's what I look for, is a test and reject back down. Okay, so US yen, wait for retracement to complete, sell at 150.75, stop loss 45, take profit 170 to the downside. Looking at that push up test, 150.75, 45 to 170. There we go. Okay, cool. And also one thing I want to show you is on US yen on the H4. You see that we want to see that rejection because on the H4 time frame it has also formed a pin bar. On H4 at the 149 level we have this crossing up, so it could well and truly break back up strongly to the upside, but first we want to see what happens at 151. Okay, so not ruling out the chance that it might not continue back down. We'll look to see what happens at 151. We'll put that in. Complete at 151. Okay. And then I think the pound is still dropping. Yes, pound dollar with the news here coming out at 7 p.m., which is this dotted line here, has already dropped. I already closed out on that trade. Take that away. We talked about that rejection of the resistance as it failed to break higher, broke that trend line, big downside move. Take all of that away. Now, the trend line, move that away for now. Trend line is there, that makes sense. I don't need that anymore. Take that away. I don't need 38.2. Okay, there we go. And then we have 61.8 holding. Beyond that point, we have this, and we have this point here, and this point down here. All right. So coming back to where we are now, one thing you have to be very careful of on the pound dollar is that it's not, with the way it's front run and it's pushed strongly to the downside. I just want to show you that on the, I can't remember now. Wait, when was it? Sorry, I'm just going to scroll a little bit. I was just looking at this morning. Okay, here we go. On the 6th of June, when the ECB cut rates, when the ECB took rates from 4.5 to 4.25, 25 basis point as expected, what we saw, this was on the 6th of June, what we saw on the euro was that, right on the release of the news, it doesn't always mean that it would drop straight away, right? The euro dollar actually went up slightly from 1.0866 up to 1.09, set in that area before the next week, or on Friday, pushing down. I think that was a non-farm as well, right? So pushing to the downside. So it's not always the case. It's not always the case that it would drop, mainly because that it seems to have, especially on the pound dollar, now front run that decision. Okay, so what I would be looking for on the pound dollar is that reaction here at that 61.8 and that 1.2780 level. If that breaks, and what I'm expecting, you see that being outside of the Bollinger, so I'm thinking that it's going to sit there, maybe push down, but bounce back up, and then we're looking for that. Not always going to happen, but we have to set up for the possibly the most likely scenario, or what we expect to see is for it to break 1.2780. So 1.2770, stop loss will be 20 pips, take profit will be down 35, all the way down 65 to the downside. All right, so that's what I'll be looking for on the, I'll draw that again, on the pound dollar. We're going to see a reaction at this point. What I think is likely to happen here, might sit there, push down, test, and then come back down again. Okay. Does that make sense? Do put into the chat and let me know if it makes sense. Now with that 1.2770, stop loss 20, take profit 65. So 1.2770, stop loss 20, take profit 65, BOE position pending. There we go. Look at the dollar, still pushing up, so that's good. Slightly outside Bollinger, but that's fine. Then, so that's still coming down. I'm okay with that. Then onto the euro dollar. Spoke about this for a long time. It's been sitting in that range. Thanks for that, Haider. It's been sitting in that range. Yes, it could still break down, especially with the pound dollar likely to drag, not really drag the euro down, but apply that same pressure to pull it down. So 1.08 is reasonable. You go below 1.08, right? So 1.0795, 20 pips, 255 to the downside. That would be, oops. Yeah. Down to this point here, 61.8 broken to break that point. Yes, okay, I'm happy with that. 1 point. You wanted to break 1.08. Okay, so the main thing here is that you wanted to break 1.08, which is close to that 50% retracement level. So 1.09, 1.0795. 20 to 55 to the downside. 1.07 95, 22.55 to the downside. Okay. Then, so it's sitting there now. Yes, I'm happy with that. Resistance, resistance makes sense. Support level way down there. Okay. You can see that the dollar weakness, that dollar weakness has not had that much of an impact on the euro. So I feel like the euro does have that downward pressure and it's going to keep that. Okay. Then onto the US Swiss franc, did not test up before pushing down, but it is at this support level. Right? Don't need that. It is right here at this support level. Possibly, I would put this as another contradiction, as a contradiction is that if the dollar doesn't weaken all the way and it finds that it breaks up and pushes all the way up as a big take profit or something, could find a support here before pushing back up, right? So you want to see that the pound, the US Swiss franc could test and bounce back up. Be looking at about 187.7025 to 60, then that would also come into contact with that trend line and push back down, possibly, right? So we might look at that as an alternate scenario. 877025 to 60. We look to buy that up. Buy at 0.8770, stop loss 25, take profit 60 to the upside. Okay, then on to the US Swiss franc. Right, we talked about this, how it has reacted. I'll show it to you on H4 at this level here to turn back down, and over the last couple of times it came down. I think Ida was saying that he caught the loonie to the downside. I think that was in the other stream that disconnected for some reason, right? So it broke that trend line, came down to the support level before now looking like it's going to push back up again. We do have, no, we don't have any big news here on the CAD. Okay. So now I'm looking at this sitting right there. I like that retrace. Right, it's a healthy retrace for that big upward push. Take those away. At this point, you have that as it pushes up. That's my resistance level. You still want to see a reaction here. I wouldn't be very keen to buy it upwards, because you've already seen that it can test this point and turn back down, right? So if you were looking, for example, to go, oh, if it breaks this resistance, I'm going to buy it up, then it could go up 17 pips before turning back down. And you're only looking, well, not only, but you're looking at a 50 pip move to the upside towards the next major resistance. So what I would do here on the US CAD or on the loonie would be to see what happens as it pushes up, firstly within this area, and then also at this resistance level. Okay, I wouldn't do anything on loonie, looking for a reaction at the most at that 1.39 level. Look for reaction at 1.39. And this is quite usually the case where, you know, after 1 or 2 days of good movements and high volatility, then it's not always the case where it will continue on. And that's where you make the most mistakes. You try and force trades out and try and get into more trades. It could be a day where you just look at it retracing or look for it to get to a key level, to react to a key level before you get into a setup. Okay, so again, wouldn't do anything, looking for it to push up, anticipating that it's going to push up, but we want to see reactions either in this area or up at 1.39. Hyder sold at 1.386, closed with 60 pips. Very nice 60 pip move to the downside. Checking that, still holding, checking that, still holding. Now looking at gold, we moved exactly as we had expected. Right, gold we said needs to break 24.25 to trade up to 24.50. And it did that. It sat in that consolidation, struggled slightly to break that 24.25 level because it sat right there. And once it broke, it went straight up to 24.50, and then it sat in that consolidation, now retracing slightly. Right, it's retracing slightly also because we are seeing that dollar strength in play. That's why we're seeing this drag back down. But we want it to stay above 24.30. And in fact, I would like to see it come down to test 24.30 before bouncing back up. So like that. All right, but you can see that 24.50 is a nice reaction number. Beyond that, the next big resistance is at 24.80. Right, 24.80 right there. So I would say that on gold, we would want it to test. Could retrace to test 24.30. Look for rebound to 24.50. Beyond that 24.80. I don't think it's going to get there today-ish, but we're looking to see, you know, it come down, test this area, bounce, break up above 24.50. Then at a very big move, if there's a very big move, we could see it get to 24.80. Okay. Today's stream a little bit less hectic compared to yesterday, where at this point yesterday we were looking at the yen dropping and I was rushing to finish because I wanted to get into some trades. Today seems a little bit more subdued, although we did have the pound dollar drop massively before the news and before our session, and still dropping on during our session, but we're looking for that setup to play out. Euro dollar is going to be interesting at 1.08. Sweezy and Loonie not too interested in those. I think what I'm looking out, either the yen, especially the pound, and the euro. All right, so if you haven't already, do remember, help me out, click that like and subscribe button. I will keep the stream running, especially on the pound dollar if we do see it continue to drop. If you have any questions or feedback or comments, put it in the chat, or I will be releasing the recorded version of this, so leave me a feedback as well. Please trade well, trade safe. I'll catch you again tomorrow. Take care now.